Okay guys, welcome back to the channel. It's your boy Hassan, and today we are talking about another analysis on US oil. I told you the strategy works on each and every pair, each and every asset, each and every commodity for as long as it uses candlesticks, charts, and it is on the trading view platform. That one, you will be able to analyze it well and get the direction of the market. However, so we have US oil, and I'm going to be taking you through US oil on the top down analysis combined with demand and supply for entries on the lower time frame. Guys, I have this strategy, and I can tell you that it is a strategy that I thought about by my own what can I say okay, it is something I combined, and I find it very good. I had supply and demand. I learned I learned a lot of strategies, but the ones I zeroed down to were supply and demand, and then top-down analysis. So for top-down analysis, it was good in determining the direction of the market, especially that you come from the high time frame to the lower time frames. That was perfect. However, after getting the directions, now the entry was the problem. Entries was the problem for top-down analysis. Now, when I got supply and demand was good. Supply and demand was, it gives you entries, but it doesn't give you the direction. So you have to determine the direction first and then use supply and demand for entries. Why do I say so? It's because you can see a demand zone on the weekly, but then you cannot enter on the weekly. So what will you do? You will just go to the daily, to the 4 hour or 1 hour, 3 hour, 2 hour, whichever you find a suitable demand zone that aligns with the one on the weekly, and then you enter from there. And guess what? The entries are always precise with sniper tight entries. So you're going to risk as low as 15 pips, 20 pips, 30 pips, and then make as high as 100, 100, 200, or 300 pips with demand and supply entries. That is what I can assure you. And if you think I'm lying, you can go and do your own research, backtest, and then you come and give us what you have gotten. Okay guys, so without further ado, let me take you straight to the charts, but you will first subscribe to the channel, because that is what we always do here. Subscribe to the channel first, and then I'll give you the full gist of what I have today. So giving you 5 seconds to subscribe, and then we proceed. So let's go guys. Okay, so now I hope you have subscribed. Let's go to the chart. So now what do you see here? This is a live market, and this is US oil weekly time frame. I told you with my top down analysis, I start from the weekly, daily, 4 hour for execution, 3 hour for execution, 2 hour, 1 hour, 30 minutes. I rarely go to the 30 minutes unless it is extremely required. My last time frame is 1 hour, but in most cases I always get my entries on 4 hour, 3 hour, and 2 hour. Okay, so now what do you see on the weekly time frame? You see US oil trying to print a bullish engulfing weekly candle. Bullish engulfing what? Weekly candle on the weekly time frame. Where is it? This candle here. It's engulfing 1, 2, and today is Thursday, so which means we have only 1 day to go. So we are looking at, if this candle closes as a bullish candle, then we shall be in for long buys up to around this area. And what do you see around this area? You see a supply zone. I told you a supply zone is simply an area of consolidation before a huge move, a huge impulse to the downside. The demand zone is the opposite, an area of a consolidation before a huge impulse to the upside. So these supply zones also can help you as your target areas for price action. For example, If price action was here, you would know it is going up here. And why do you know it's going up here? Because there is a supply zone up. So you know price is going to retrace until it reaches up. So your target should be at the supply zone here. And also this area is a break and retest area because price has been ranging around here for a long period of time. Finally, it came, tried to break out, did not break. Retraced, created a supply zone, and then broke out massively. So this is the area that caused a breakout from here. So price is coming to probably retest this area with a break and retest and then shut down. And if we follow that trend, it is helping our narrative. Why? Because this is an area of break and retest, and we are already in a downtrend, and there is a supply zone. You see, this is lower, lower low, lower high, lower low, lower high, lower low. So now we are coming to retest this area. Retest, tap into the supply zone. As we retest this area that was previously broken, I will probably send price to this side. That is what I'm seeing on my analysis. I don't know what your analysis gives you, but my analysis, that is what it gives me. And that is what I'm going to follow because that is my strategy. So now what is happening is we are going to tap this area and drop down. But before we reach there, how do you take advantage of that? People who trade support and resistance, this is resistance, this is support. So when price came here, you already knew that you're going to buy. So you're already in the trade. If it's a trade support and resistance, you're already in the trade. And this is good. That's why I told you, you see, with my strategy, you can also combine it with support and resistance, and it is already combined with support and resistance because this is an area of support which was broken and turns into resistance. We know that support, if broken, turns into resistance, and there is demand and supply, and there's also an area of retest. So there's going to be retest here, there's going to be demand and supply. So chances are high we are going down because why we are in a downtrend. Why do I say so? Now look, coming from here to here we took only 2 weeks. Coming from here to here we took only 2 weeks, but coming from here going up, it is taking us almost, this is now a month, a whole month we have not reached up. A whole month we have not reached even halfway. So that means the bearish momentum is high, the bullish momentum is low. However, we shall follow the bullish momentum until when it reaches here, and then we sell. I hope I'm clear up to that. So now what do? We go to the daily. We have known where price is going on the weekly, so we go to the daily. How do you send the daily? On the daily, you see something like a head and shoulder. Oh, and guys, I also forgot, there's a head and shoulder on the weekly. However, it is not a convincing head and shoulder on the weekly. You see this head and shoulder here. It is not one that is convincing. I don't know how people, some people may see it, but me, I don't see it as a convincing. This is a shoulder, this is a shoulder, this is a head, this is a left shoulder, but it's not convincing. If it was the inverse, I would be happy. If this one was the one here, if this neckline was the one here, like it is a shoulder, short neckline, then a head and a long neckline, there I would be happy. It would have formed a QM for me. So in the retest here, I would be buying automatically. I would be knowing that it is now going for madness to the upside. So we go to the daily. So the daily, what do you see? The daily, it is not even a head and shoulder. It is looking like a double top, a double bottom. This is a bottom, this is a bottom. This is where the small head and shoulder was created. Here, a head and shoulder, and then we went up. So this is not even a head and shoulder. The one on the weekly is not quite a good one. This is a double bottom. So if give you this bottom and then you bought, so you'd be in profit so far. So what is happening is that price is ranging around this area. It has been ranging around this area for how many days now? Let me show you. Let me show you. It has been ranging around this area for 18 days. That is almost 3 consecutive weeks, guys. 3 weeks price is ranging at that area. So now what do we expect next? What do we expect next? So I see a demand zone down here. Let me mark it for you guys. this is a demand zone at a place of support and resistance. This is support, 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 support. Has been used as support 3 times, and there is a very big, huge impulse away from this area. So now it creates a demand zone for us here, and on that we have a trend line down. Someone will ask, hey, you know, this guy is even using trend lines. Just use them as confluences, guys. And my trend lines, I decided to be drawing them on the wicks, not on the candle closure, on the wicks of the candles. So we have a trend line that it is going up, and it has a second touch on it. This is the first touch, this is the second touch of that trend line. It is going up, and we know that the third touch of the trend line always does the magic, always does the magic. The third touch of the trend line. I'm just refining this supply zone. I don't think price will go up to there. I don't think so. Let me just use this candle and use the weekly supply zone. I don't think price will go up here, being that we're having our resistance here. Price can easily come on this resistance and it shoots up. Let me see. That was what I think, but it doesn't matter. There's a supply zone up there. No, price will reach up there. So what is happening here is there is a demand zone below. Remember, why are we incorporating in demand? Because our top-down analysis gives us demand zone, supply and demand for entries. So there is a demand zone below here. There is a demand zone below here. So what we are expecting is, and there's also a trend line that is in play here. So what you're expecting is price to come, probably tap this trend line or tap into this demand zone, because if it taps into the demand zone, it will be tapping into the trend line as well as tapping on the support, and then send price up. And you see, we have very many confluences that are giving us, that are telling us that price is supposed to be going to the upside. Do we have Fib confluence, Fibonacci? No, we don't have it. It has 50%, but my Fibonacci, I consider this 61.8%. However, the 50% is there in that area, which is also considered by some people, though for me I don't consider it, but it will be added as an extra confluence. So on US oil, I'm bullish, and we are extra bullish. We are going to the upside. However, before we go there, we are expecting a small pullback to downside. Why do I say so? Because we are not breaching this area. We have tried to breach it for now how many days? We are not going above it. You see this area here, we came, dropped down, came back, dropped down. We reached, we did not reach it there. We dropped down. So we have come back, rejected, and now we are rejecting. So I'm expecting that we are coming down here. First tap this area, and then we go to the upside. That is what I'm expecting on US oil, at least what I can see. So now, how do we take advantage of this? Our demand zone is clearly marked out on this candle closure here, body, daily demand zone. So we are going to drop down to the 4-hour, and then refine this demand zone to the candle closure. So what is happening is they are having a lower low, lower high, lower low, lower high. Guys, just forgive me. There's no lower low going up. I don't know what's wrong with me. Higher high, higher low, higher high, higher low, higher high, and we have made lower low. So what are we hoping? We are hoping that since price has showed us that it is going down, this is a QM pattern. I'm coming to show you. This is a QM pattern. I have showed you. This is high, low, high, low, high, lower low, breaking this low here. Some people can even call it a head and shoulder. So which low have we broken? This low here, this low, this one here. We have broken it to the upside. Remember, when price is an uptrend, we make higher high, higher low, higher high, higher low. So we put in a higher high. We're supposed to make a higher low here and then go up, but instead we made a lower low, a lower low. So we are coming to retest, and remember, look at the precision. We have retested this low and rejected, and it looks like we are going to the downside. And when we are going to the downside, where are we going? We are coming to this demand zone here. So I'm expecting, since we have broken this low, remember this is a strong low because it created a high, so it doesn't have to be broken. But if it is broken with a lot of this momentum, then engulfing bearish candle, that means we are going down. So we're expecting price to come and tap in this area, test this trend line, tap this area, test this support, and then we are buying price up to here. That's what we're expecting on the 4-hour time frame. When I go to the 3-hour, do I see anything that supports our idea? Price going down? Nope. The 3-hour so far, no, nothing that I can see. When I go to the 2-hour, 2-hour is already telling us that we are going down. We have retested this area, we are going down. However, the demand zone is here. The supply zone, guys, just forgive me. The supply zone is there. We are going down. That is what I see. We are going down. So this one made like a double top on the 2-hour and made a strong impulse, creating this neckline. So we retest the neckline, guys. Double top, break of the neckline, retest on the neckline, we drop. Those are the rules of a double top, you guys, you know. And when we are dropping, we are coming to this demand zone here. Okay? And this is guys, this is a QM pattern, guys. This is a low, high, lower low, higher high, creating an imbalance there. There is support and resistance. US oil is coming down here, and then we shall be shooting it to the upside with massive momentum, guys. Massive pressure. I don't know what to say, but we are selling it. In the meantime, we are selling it to the downside. So you can sell, put your stop losses here. That is around, it is big, under 100 pips, 0.1 to be 10 pips, and then target 20 pips to the downside. That is 1:2. It should be 1:2, guys. Why it's not moving? 1:2 to the downside. US oil, guys, is selling. US oil is selling after breaking off. This is breaking of the neckline, and this is looking like a head and shoulder, whereby this is the head, this is the shoulder, this is the shoulder. But if you don't consider that this was a double top, and then strong bearish momentum to break this neckline, to break the neckline, it's retesting the neckline. So guys, we shall be selling US oil to the downside. US oil is selling to the downside, to the demand zone. We are selling US oil to the demand zone. US oil. So guys, I'm just entering this US oil sale. That's why you see it, I'm keeping quiet. I'm entering this sale to the downside. So US oil sale to the downside. Then stop losses go above here. 10 pips, 100 pips. Then take profit is 200, which is 20. So guys, I'm already in this trade, selling US oil up to around here, and then we shall be buying it to the upside. Do you have anything on 1 hour? It is still the same thing on the 1 hour. Neckline was broken. This was a double top. In fact, this wasn't a double top. This was like a higher low, a lower high on the 1 hour, and then neckline broken. We are retesting the neckline, so we are going to be heading down. US oil is very clear cut. Okay guys, so that is all for today on US oil top analysis with supply and demand. So You can, if you've learned something, subscribe to the channel. Or if you like our videos, always comment and give us energy to make more videos like this. That is all for today, guys. Peace. See you in the next video.